Okay, so I'm back with a midnight stream, and we just had the economic data for NZD released, the New Zealand dollar, and just like I was analyzing in the previous stream, these data they meant bearishness for the currency. So now the final verdict is out, the actual data has been released. And for the employment change, this data measures the change in number of people employed. So they had an increase of 1.0, the forecast was 0.6. So they anticipated a reduction in the number of people employed from 0.8 to 0.6, but the figure rose by 1%. Let me refresh this tab just in case there is related stories now. So the employment change measures the change in number of people employed, and the anticipation was to actually see a reduction in the rate of these employed ones. This was a negative anticipation for the economy, but the results, the actual was out and it is positive. So this is a better than expected result. If you go to platform like my FX book, they will indicate it there. So this is my FX book. You see the indication there that it is a better than expected results. Dates. Okay. And this is the data. As you can see, my FX book indicated it as a better than expected result. So they expected a reduction. So the consensus here on my FX book is still a bearish one, reduction in the figure, but what was released as the actual figure is a better than expected result. So that is for the employment change, and this one, the unemployment rate, what it measures is the percentage of total workforce that is unemployed and actively seeking employment during the previous quarter. So these are people that are unemployed but they are available to work, they are ready to work but they don't have jobs. So the anticipation was for the number of these people to rise from 3.4% to 3.5%. But at the release of the actual data, we had a statistic of 3.6%. So this is negative impact for the economy. So for both news, the employment change and the unemployment rate, they have contradicting effects. So this one is bullish and this one is bearish. But I am kind of optimistic that the bearish impact will play the key role in this currency given other factors. So I have already taken my profits, like 80% of my profit from this trade already. This was the setup here. My execution was just within this time frame on sales, so I was able to catch this whole move. I have taken out about 90% of my positions. I am targeting the possibility, take note I'm saying possibility alone, to have maybe an extensive move. Let me go to a higher time frame. I'm looking for the possibility for this setup to be a trigger to run the sell side liquidity. It's only a possibility. We did not take that out, so back to my point of execution. Let me see the daily. Let me see if we closed in or out of the daily range. Okay, so I'm going to be expecting tomorrow's candle, which is okay. We still have 17 minutes in today's candle. I'm going to expect tomorrow's candle to close, to attack the lows, as long as we do not close like above the low of this previous day. So if we close outside the range of this previous day, I'm going to be looking for bearish continuation. So I'm still holding like 10% of my initial execution. It was heavy execution here to trade the news, because the news was a bearish one for me from the way I execute. It's a bearish impact, so I was not to hold that execution for long, and I've taken 90% of my profit already. Okay, no, that's about 80% of my profit already. And as you can see, let's go a bit technical here. This is previous day's high. Yesterday, you can see we ran previous day's high and we failed to close above it. We ran the high, failed to close above it. We closed inside the range, so this is sign of bearishness already. It's a sign of bearishness, and today we did not even run this high. So this is kind of like a swing formation forming in the high time frame. A lower candle to the left and a lower candle to the right, and we're about closing. Within the next few minutes we'll be closing. This daily candle will be closing. I think my time estimate for the close of this candle is wrong, so this is, yes, by 1 a.m. this candle should be closing. Okay, sorry, this is the new candle already. This is the new candle already. Sorry for that confusion. So this is the new candle already. We closed August 1st candle inside the range of this candle. We swept the high, so this is more like a liquidity sweep above the previous day's high. So this is buy side liquidity being swept, and we closed back in this range. Closing back in this range, that gives us a bearish bias. So I'm looking for the possibility for this August 2nd candle to still close as a bearish candle. So I'm still in my position. I don't know how far it can go, but I'll mark out several PD arrays I'll be looking out for. So we have this, the open of this candle, which can serve as a daily order block. Let me drop down to 4 hours to see if there is something to see in the 4 hours, and boom, here we go. We have this inefficiency here, we have that one here. So possibility for price to close this out, and if you look at this dealing range, you can see this inefficiency is in premium, virtue of sweeping out all of these highs. So market is currently in premium. We will likely be seeking discounts. Possibility for us to seek discounts because we are trading off a premium array. So yes, this inefficiency is just slightly above the equilibrium level, and we have another inefficiency here. So all of these are possible targets I'm going to be holding. Looking for possibility for price to fill this up, possibility for price to fill this up, and if price does not fill it up, no problems. I already have taken out 90% of my position, given this particular specific news. I traded 11:45 p.m. my local time, so it's 12:21 already. I took that trade a few minutes ago, and if you look at this whole formation, technically it still supports bearishness, so that is more validation for me to likely hold my position. Look at this. So this becomes more like a long-term high. Okay, let me capitalize that long-term high. seems like a long-term high, and this high here becomes an intermediate term high. Where is my text too? So I'm looking for the possibility for price to protect this specific high and not run through it. If we violate this high, that means we might have switched back to a bullish program. So I'm looking for the possibility for markets to protect this high, protection of this high, and drop to seek discounts before any form of bullish continuation or whatever. But for now, I am seeing this setup, so it's not financial advice, but I'm holding a sell position, targeting this inefficiency and targeting this one. So this, at least I should be able to see the consequent encroachment of this one, at least a 50% fill before, if I will consider taking out more profits, then it should be around the consequent encroachment, which is here. Boom. And I have lots of lines on my screen already now, but this is my short-term target, and this, to fill up this whole void, is this inefficiency is another target for me, and to drop to this one is another target for me. So that's all for this, and there's many lines on my screen. Now this is a positive data for this economy, but this is a negative data, and sometimes in this marketplace the negative data tends to cast more influence upon price. So this is more of a fundamental validation for me to hold this technical setup. So I'm going to hold this position. I will set my stop just above this high, or maybe this one, any of these. I'm going to use any of that and hold my position to get this fill, or this or this. So however, so I'm going to likely run this position through the night. So I'm trading 2 active pairs on this specific time right now. So these pairs usually active during the Asia session, so I don't have a problem with the volatility of this pair at this time of the day. So I will be going to sleep and setting my stop to protect my accounts. And take note, I've already made profits, like good margin of profit already from the new setup that I trade. The execution that I executed on the new setup, I've already gotten my money for chicken pie and Pepsi. Now I am holding this technical formulation here and trying to run it to all of this. So it's no hard and fast rule. It's not necessary that price must do it, but that is my anticipation, and my risk is under control, so there is nothing to worry about. I don't necessarily have to be right, but I am still running in good margin of profit right now on the small position I still have on this particular trade. That is that for that. Chicken pie and Pepsi secured for this. So the next one coming up is Wednesday. Okay. The next one coming up, I think that was an oversight. I thought this is supposed to be still tonight, this early morning, but that's not necessarily it. The next one we have is the USD ADP non-farm employment change. Let's see. So this one measures the number of employed people during the previous month, excluding the farming industry. So if you're a farmer, you're not counted here. Let's see how we can get chicken pie and Pepsi on this tomorrow. This is 497 to this, so this is an employment figure, and what we have here is reduction. So this is a negative one for USD, but other factors will be put into consideration by tomorrow to validate my bias for me to be able to trade the actual data release setup prior to the release of the news. But this news is coming up 1:15 p.m. local time, West African time, and if you want to trade this, make sure you're reading through all of these related data and probably get some technical verification before you execute your execution. But I think I'll stream another stream tomorrow to maybe talk a bit more on this particular one. bit more prior to the release of this one. If I'm chanced, I will be here again to stream another stream and give you guys updates on the chicken pie and Pepsi business. So for now, I'm going to be ending this stream and wishing you good night rest.